and the role of innovative financial solutions to deepen financial inclusion in CAREC member countries. I am Safdar Parvez, and I'm a director in the Asian Development Bank. We have a very high-level distinguished panel today, comprising of honorable governors from the central banks, deputy governors, senior of finance ministry officials, distinguished private sector representatives, as well as senior officials of the international financial institutions, including the IMF, the World Bank, and the Asian Development Bank. Before we start, just some housekeeping reminders. Because we have a simultaneous translation interpretation, please kindly speak slowly. And when you are not speaking, please keep your mic on mute. In your remarks, we would request you to kindly be precise and concise, because we have a strict time limit for this session, because there are back-to-back sessions in these Astana finance days. With this, we can start. This year, Azerbaijan is the chair of the CAREC conference, and it is my great pleasure to invite Mr. Rashid Orujov, Executive Director, Central Bank of the Republic of Azerbaijan, to provide some opening remarks. So, Mr. Orujov, over to you.
Thank you very much. It's my pleasure to have a privilege to make an opening statement at this important event and to make an address to distinguished audience. First of all, I would like to thank co-organizers of this event, CAREC Secretariat and Astana International Financial Center, for cooperation in the organization of this policy dialogue. My short remarks will fall into three categories. First being recent global and CAREC trends. Second, policies enacted to Azerbaijan to counter the consequences of pandemic, and the policy paradigm in post-COVID period. We all are going through very challenging and interesting times. And on the one hand, unprecedented fight with COVID pandemic and rollout of vaccination programs continues, and on the other hand, swift global recovery is underway, also uneven. While recovery is highly welcome, it also creates challenges like inflationary pressures and requires policy considerations. But I'm not going to touch upon these topics today. Instead, I want to say a few lines about CAREC countries, which is home to almost 23% of world population and accounts for 18% of the global GDP. The CAREC region consists of 11 economies, which are at varying stages of development, ranging from low income to upper middle income, with an average per capita of almost $3,200. In response to economic contraction, fall in revenues, and disruption of supply chain, CAREC countries have undertaken significant measures to support affected people and keep the economy and financial system functioning. And Azerbaijan has implemented a multi-layered policy framework to withstand COVID challenges. The difficulties stemmed from the disruptions in supply chain because of the phased-in lockdowns and fall in revenues. The government and the Central Bank of Azerbaijan have implemented a synchronized set of measures to prevent sharp economic downturn and reduce the impact of the pandemic, to protect vulnerable businesses, especially SMEs, and the population from negative consequences. Some fiscal measures included paying wage to employees in certain sectors to prevent job losses, the government guarantees and interest subsidies for new and existing business loan portfolios, financial support to economic entities in the sectors mostly affected by the pandemic, and several rounds of one-off payments to unemployed during a strict lockdown. In general, fiscal support measures accounted for 4.8% of GDP, and while the real GDP declined 4.3% in 2020, economy rebounded in May of the recent year. GDP 0.8%, but most importantly, non-oil GDP 4.5%. Monetary measures mainly included the gradual reduction of the pulse rate by 125 basis points. Also, the central bank has adopted some prudential measures like promoting proactive restructuring of business loans, relaxation in prudential regulation, restrictions on dividend payments, and so on. Prudential measures in synergy with fiscal and monetary measures have helped to preserve financial stability and maintain a flow of credit to the economy. To the date, central bank has adopted a strategy envisaging orderly rolling back financial sector relief measures while safeguarding financial stability. In general, a robust and swift policy response to the pandemic set the floor on the economic contraction and ignited a recovery and stability in the financial sector. Now, as the world economy has started to rebound from the crisis, it's time to make lessons and set agenda for new priorities. Financial inclusion and innovation gained special significance during the COVID-19 pandemic, when a large part of the world's population was locked up at homes. Before the pandemic, there were two common issues, mainly with financial inclusions and intermediation. First, globally, 1.7 billion people still remain outside the official financial and banking sector. The second, which is more specific for developing countries, particularly to the most of CAREC countries, is a lack of non-bank and alternative financial instruments. Innovation and particularly fintech can be harnessed to make inroads in both directions. Financial technology can lower the costs of financial intermediation, and in fact it enables profitable intermediation of the unbanked population and diversifies funding channels. And according to the McKinsey Global Institute assessments, digital finance can potentially bring 1.6 billion people into the financial mainstream in emerging economies. Therefore, financial innovations is considered a policy priority in many countries, including Azerbaijan. Azerbaijan has set its digital aspirations in the national strategy for 2016-2020 and started to create a necessary infrastructure, both legal and technological. Two state programs have been implemented to enhance national payment system infrastructure, to expand cashless payments, and last year, the instant payment system and the bank identity platform, which allows customers to be identified remotely, were established. Nowadays, draft law on payment systems and organizations are expected to be enacted, which will serve as a platform for regulation of digital and fintech activities. And in the coming years, Azerbaijan, building on sound technological infrastructure, intends to move beyond payments to digitize the traditional financial and banking services and products like deposit, credit, and capital raising. In the end, I would like to emphasize the importance of knowledge and experience sharing at CAREC platform towards the financial innovations and inclusion. So this type of events creates a good opportunities to discuss and address the challenges and opportunities and align the priorities. Thank you very much for your attention, and I wish you all the best. Thank you very much.
Thank you very much, Mr. Orojo, for those remarks. Let me now please call upon Mr. Yevgeny Zhukov, Director General, Central Asia Department, Asian Development Bank, for brief welcome remarks. So Eugene, over to you.
Thank you, Safdar. Good evening, good afternoon, and good morning from Manila, Philippines. It is my honor to welcome central bank governors, deputy ministers, senior officials, fintech executives, colleagues from IMF, World Bank, CAREC Institute, ADB, to this CAREC high-level policy dialogue on COVID-19 pandemic and financial inclusion. I want to express my deep gratitude to the Astana International Finance Center for co-organizing and giving this forum a place on a virtual platform in the eminent Astana Finance Days. This year's CAREC high-level policy dialogue on economic and financial stability will be organized in two separate events under the overall main theme of addressing inequalities post-COVID-19. This forum today is the first of the two-part series. We'll discuss the impact of the COVID-19 pandemic on financial inclusion and the role of fintech-related innovation. The second forum will be held in October to discuss fiscal policy reform measures to address post-COVID inequalities in the CAREC region. Even before the COVID-19 crisis hit, financial inclusion was already a priority in the strategic reform agenda of many CAREC countries. Countries are convinced of the micro and macro level benefits of greater access to financial services, including creating economic and entrepreneurial opportunities, bridging income and consumption gaps, promoting private sector investment, and mitigating income inequalities. International financial institutions represented in this forum, including ADB, IMF, and the World Bank, are supporting CAREC countries in deepening financial inclusion and strengthening financial sector reforms. CAREC countries are already leveraging fintech to enhance financial inclusion. Fintech drives financial innovations to serve the underserved populations, including from mobile money and e-wallets, crowdfunding, alternative credit scoring, cross-border remittances, payment technologies, using digital know your customer processes and regulatory technology. These high-tech financial services help lower transaction and service costs and extend the reach of finance to economic sectors and populations who otherwise lack access to standard financial services. Yet, there is a long way to go. Recent research from the CAREC Institute shows that many CAREC member states lag in providing services and infrastructure critical to increasing financial inclusion, such as access to the internet, transport linkages, and government facilitation. The adoption of the fintech in the CAREC region is also sluggish because of slow-paced adoption and diffusion of advanced cellular technologies. The income and employment losses brought by the pandemic have further underscored the urgency to enhance financial inclusion, especially for the most vulnerable segments in the CAREC region, including women, rural populations, and the poor. We must promptly address the exacerbated financial difficulties of many micro, small, and medium-sized enterprises during this pandemic period and support them in raising capital and accessing payments and credit options. Government and fintech companies must work closely together to create a conducive regulatory environment that facilitates the development of innovative financial solutions. I am pleased to see the participation of prominent private sector institutions involved with fintech solutions, including Ripple and the Visa, in the forum today. I urge all of us to maximize this opportunity to share and learn as much as we can today. Once again, I'd like to thank you for joining this important meeting today, and we're looking forward to a fruitful discussion. Thank you.
Thank you very much, Mr. Zukov. And before we turn to the panel discussions, I'd like to give the floor to Lalita Murthy, Regional Director for World Bank's Europe and Central Asia region, to set the stage for the meeting today. Lalita, over to you for some brief remarks, please. Thank you.
Thanks very much, Safdar. Gives me great pleasure, distinguished guests, to be here with you today for this CAREC event during the Astana Finance Days. I'd also like to extend my deepest thanks to the co-organizers, the Astana International Finance Center. I'm genuinely grateful to see that this forum is focusing on financial inclusion in the light of COVID-19 pandemic, which is expected to push an additional 160 million people into extreme poverty by the end of 2021. It's also good to see that CAREC places shared prosperity and poverty reduction at the heart of its partnership. These are, of course, also the main goals of the World Bank Group. Today's event offers an opportunity to discuss our experiences from these extraordinary times, share lessons learned so far, and look ahead on the topic of financial inclusion. As all of you know, an inclusive financial system empowers individuals by helping them invest in education, save for retirement, build their businesses, and manage shocks. Access to finance also empowers firms so they can boost employment, innovation, and productivity. CAREC countries experienced significant improvements in financial inclusion over the past decade before COVID-19. Account ownerships in Central Asia and the South Caucasus doubled from 20% in 2011 to roughly 40% in 2017, according to World Bank data. Nevertheless, this number is still very low, especially when compared to countries in Western Europe, and the poor people represent a disproportionate share of the unbanked. Also, in some countries, gender and rural population gaps remain very high. World Bank data and surveys can also give us insights on access to finance for SMEs before and during the pandemic. In Central Asia and the South Caucasus, both access and usage of financial services for firms lagged other regions before COVID-19. On the bright side, the pandemic has accelerated the adoption of digital technologies. Over a third of the firms have expanded the use of digital platforms and technologies globally. As I look at such trends, I feel that our discussion today should ponder three themes. First, we're not out of the woods yet. Second, we must embrace the new. And yet third, don't forget the old. Let me explain. First, the economic effects of COVID-19 are still with us. We're not out of the woods yet. The COVID-19 shock has damaged otherwise healthy borrowers and impacted the economy through demand and supply shocks, financial volatility, and through a significant rise in uncertainty. As the global economy begins to recover, pressures on asset quality are expected to increase. Once moratoria and other relief schemes are discontinued, we may face a significant increase in NPLs and heightened risk aversion by lenders. Like any good supervisor will tell you, in the face of one of the worst economic downturns on record, there is no room for complacency, even in countries whose financial sectors are in good condition. In the World Bank, we encourage all our counterparts to focus on three key elements. First, supervisors must strengthen regulation and supervision to identify problem loans. One should avoid blindly trusting the reported ratios without some scrutiny. Second, we must ensure that the banks are prepared to work out the rising volumes of problem debt. Third, countries must address early on any issues with insolvency frameworks and creditor rights. Legal certainty will help banks realize their claims in a predictable manner and allow viable borrowers to recover. So the first point is that unless we ensure financial stability during COVID-19 recovery, financial inclusion will suffer significantly. Next, let's explore the second theme, namely how we embrace the new, the digital finance services. The growth of digital financial services has been phenomenal. They help reach households and SMEs that traditional services have excluded. They also seem to transcend gender, income, and location barriers. Who hasn't heard of Kenya's successful M-Pesa for payments over cell phones? Alipay and WeChat Pay's impact in China by leveraging QR codes? Or my own home country, India's Aadhaar, a publicly provided digital ID that made bank account ownership possible for over 1 billion people. During the pandemic, policymakers have relied on digital financial services to deploy policy support. Global downloads of non-bank financial apps have increased by 45%. and the shift of remittances from cash to digital kept the officially recorded flows to developing countries to just 1.6% below the numbers in 2019. In Eastern Europe and Central Asia, digital finance adoption is growing, but there is significant variation. In the World Bank, we focused early on digitizing cash transfers and payments, establishing faster payment systems, establishing digital IDs and electronic Know Your Customer, as well as supporting fintech ecosystem. And when the COVID-19 pandemic hit, we doubled down on helping build financial and digital infrastructure. Nevertheless, innovation comes with risks, and policymakers must strive for a very delicate balance. Lack of access to mobile phones and internet, data biases in big data analytics, low digital literacy, and even cultural biases can hamper inclusion. Policymakers must prioritize financial inclusion strategies that integrate women, rural population, and other disadvantaged populations. While fintech may challenge traditional market players and raise competition, the risk of digital monopolies is very much a reality that COVID-19 may intensify. Ensuring a level playing field and common standards would be critical, and competition policies will need to be rethought to capture new dimensions such as data and not only prices. Just as banks have suffered from a lack of trust in many countries, a similar loss of confidence in digital technologies can negatively impact financial inclusion. Cyber resilience and data privacy are increasingly taking a center stage. A money laundering scandal or inappropriate lending practices can become a catastrophic reputational risk. Regulators will have to weigh consumer protection, AML/CFT considerations, and financial resilience against the benefits of financial innovation. So to review, first, the economic effects of COVID-19 are still with us. We're not out of the woods yet. Second, embrace the new, the potential for digital financial services for inclusion. Finally, let me turn to the third theme. While we celebrate digital finance innovations, let's not forget the old, the fundamental reforms that can still advance financial inclusion. It may be tempting for all of us to focus exclusively on digital solutions, yet our countries often struggle with fundamental constraints to financial inclusion. Addressing the lack of trust in financial institutions could bear significant fruits. Fostering macro-financial stability is a good start. Enhancing disclosure requirements for banks, strengthening deposit insurance systems, increasing financial literacy, all this can further help raise confidence. Second, spurring competition can enhance efficiency, offer better and cheaper products to final consumers, and expand services to new market segments. Reforms must still target institutional and regulatory gaps that underpin competition and re-examine the public interventions that restrict competition in financial services. Finally, improving the enabling environment for financial inclusion remains critical. Legal reforms to ease the use and enforcement of collateral, protect debtor-creditor rights can lead to credit with longer maturities and lower rates. It's equally important to upgrade the information environment through better credit information sharing systems and improved accounting and auditing standards. To conclude, well, we live through extraordinary times, facing an unprecedented pandemic and experiencing a digital revolution for financial services. To navigate these times, financial systems need to make it past COVID-19 unscathed, embrace the potential, and mitigate the risks of digital finance, and yet not forget fundamental reforms that still underpin financial inclusion. I want to thank all of you again for this invitation, and I very much look forward to discussing experiences, lessons learned, and what lies ahead over the course of today. Thank you very much.
Lalitha, many thanks for those clear and very comprehensive stage-setting remarks. The rest of the meeting today will focus on two panel discussions. The first panel will be moderated by my colleague Tariq Niazi and will focus on challenges to financial inclusion in CAREC countries, policy responses by member states, as well as their expectations from IFIs for further support to deepen financial inclusion. And the second panel will focus on financial innovations as key drivers of financial inclusion going forward. And finally, we will have some closing remarks by Mr. Jihad Azur, the Director for the IMF for Middle East and Central Asia Department. So without further ado, let me hand over to Tariq to moderate the first session. Tariq, over to you.
Thank you, Safdar. We now move on to the panel discussion where CAREC member representatives will share their views on the challenges to financial inclusion as well as thoughts on expected support from IFIs. Introductions first. From Afghanistan, we have Ms. Salma Alokzai, Director General Macrofiscal Forecasting, Ministry of Finance. From Pakistan, we have Ms. Seema Kamil, Deputy Governor, State Bank of Pakistan, who has had an extensive experience with the State Bank. From Uzbekistan, we have Mr. Abru Khwaja Turdilyov, Deputy Chairman, Central Bank of Uzbekistan, who has an extensive career in the Central Bank of Uzbekistan spanning over 20 years. To share their experiences and lessons learned from dealing with financial crisis, we have with us Mr. Syed Shakil Shah, Director at CAREC Institute. At CAREC Institute, Mr. Shah provided leadership in the preparation and later on implementation of Institute's medium to long-term strategy, annual work programs, and developing new products and services. Also with us is Mr. Jihad Azur, Director, Middle East and Central Asia Department, IMF. Mr. Azur served as Lebanon's finance minister during 2005 to 2008. Prior to joining the fund, he was a managing partner at advisory and investment firm Inventus Partners. And from the World Bank, we are joined by Mr. Ilyas Skumunilos, Practice Manager, Europe and Central Asia. Ilyas is a PhD macro-financial economist with World Bank experience spanning multiple regions. Kindly ensure to turn on your microphones when speaking, and please keep your responses very concise. Every speaker is requested to keep it just under 5 minutes, as we have to strictly adhere to the timelines provided by the organizers. We have framed two issues as questions. The first one will be directed to the representatives of Pakistan and Uzbekistan. The question is, what are the challenges to financial inclusion pre-Perry and post-pandemic, and what have been the policy responses taken so far by your country? First, I'll request Ms. Seema Kamil from Pakistan to express her views. Thank you.
Thank you, Mr. Tariq Niazi, and it's a pleasure to be here. First of all, I'd like to apologize on behalf of the Governor, State Bank of Pakistan, Dr. Raza Bakir, who was meant to be here. However, he was urgently called away to a meeting with the Prime Minister and could not come, and so I'm representing him. Deputy Governor at the State Bank, and my area of responsibility is financial inclusion and digital financial services, which is obviously something that we will talk about quite a bit here. I will start my remarks and divide them into three sections: on the pre-pandemic issues in Pakistan on financial inclusion, and then the peri-pandemic measures taken, and then finally the post-pandemic. In financial inclusion, as is true for most countries in the region, in Pakistan is an issue which faces us. And therefore, in 2015, we set up the National Financial Inclusion Strategy to lay a foundation to try and get the adult population to have at least basic accounts. This strategy made significant developments and created an enabling framework for inclusion and for introducing innovative products and services. Due to these initiatives, we were able to improve account ownership in Pakistan from its level, which is very low, of 2 out of 5 adults in 2017 to 3 out of 5 adults now. And as far as women are concerned, it has improved from 1 out of 5 to 2 out of 5. It's still low. We still have a long way to go, particularly as far as the gender gap is concerned. However, the challenge, which I am, keen to share, also remains that the accounts are not active. Often they fall into dormancy, as is, I'm sure, the experience of most banks and financial institutions in the region. And so we're working very much on a strategy on why this happens, and we're doing an impact assessment. And if you were talking about how IFIs can help us, that's an area to understand why people open accounts and then don't use them. And as I'm a commercial banker by background, I think I understand why. It's because we don't offer the products that they need. Now, talking about the peri-pandemic time, we took a number of measures. It was clearly a situation that was never been faced before. However, we took a number of measures during that, and those measures generally tried to protect the vulnerable parts of society, as well as to protect incomes and to ensure that there was a degree of forbearance in the banking system without compromising on their credit independence as well as their stability. We took measures that totaled about 2 billion rupees or 5% of GDP. Part of that was, of course, the drop in interest rates. And then we had loan deferment, which was entirely done at the bank's own discretions. Loan rescheduling, a lot of that, and it's important to know that 95% of those beneficiaries were micro and small and medium enterprises, which is very important. Then we did a wages scheme where we lent actually to the banks, and then they gave loans to businesses so that they may protect employers, that they may have something to, so that they will not lay off. And with that, about 2 million jobs were saved in our estimation. And then on the health front, we also gave low-rate financing for hospitals and for investments, particularly in COVID-related equipment. That was the side on the measures we took. Very importantly, on the digital side, we saw, as everyone has, a great increase in the number of digital transactions. And one of the steps we took was to waive all charges on fund transfers, which were done either on the net or on mobile phones or on ATMs, so that one, we would not have people having to go to branches, and secondly, that people would move towards these channels. And this was actually saw very dramatic improvement. And for us, it was, perhaps on a Western world, it's not as much, but we saw transactions increasing enormously from, for example, it went out of 188,000 transactions to nearly 800,000 per month in that period, which is very important to us. Mobile phone banking increased by 2 million users from 7.3 million to 9.3. For this reason, we saw that we can now, as said earlier, we introduced the new, and of course stuck to financial stability. So looking forward, as we talk about the post-pandemic, I think it's very clear to understand that it's not over yet. And however, we are seeing that we must continue with our innovation. So we introduced an instant payment system called RAS. We've also introduced a policy, or will launch it soon, on closing the gender gap, called Banking on Equality. And we're now going to focus very much on areas of open banking, as well as exploring at an early stage a central bank digital currency, because one of our main issues is the use of cash. So that's moving forward. We are seeing that the commercial banks are coping well with the exit from COVID on parts of loan deferment. We are seeing some stress in the microfinance sector, which we are now trying to stabilize by capital plans, etc. So that was basically what I wanted to talk about. Thank you very much.
Thank you very much, Ms. Kamil, for the very comprehensive views and how State Bank of Pakistan has dealt with the situation and planning for the future. Now I turn to Mr. Abror Khaja Turdiliyov, Deputy Chairman, Central Bank of Uzbekistan, to express his views. Thank you.
Здравствуйте, уважаемые коллеги. Позвольте мне прежде всего...
Distinguished colleagues, let me first of all express my sincere gratitude and thankfulness to the government of Kazakhstan for this opportunity to participate in this meeting. I'm sure that the events like this and discussions like this, given the range of the issues in the global economy and in this hardship of COVID-19 is an important step to share the experience of other countries' socioeconomic problems. Lately in Uzbekistan, the issue of financial inclusiveness is considered as one of the key drivers of the economic growth that would facilitate enhanced welfare of people and achieving sustainable development goals. It should be noted that in 2019 we adopted the law on Central Bank of Uzbekistan that states as the key priorities of the operations of regulator to expand the measures to protect the consumers' rights of services and credit institutions, enhancing competitiveness of the economic and financial services, and enhancing the literacy. To implement those measures, the central bank established the function to protect the consumer's right to consume the banking services, enhancing the affordability and accessibility of banking services, and also the Department of enhancing the banking literacy and training of banking institutions. I should also note that the central bank started the site finlit.ru that is aimed at enhancing the literacy and awareness of the population in finance and economics. At the same time, together with the World Bank, we drafted a project of the drafted the national strategy to enhance the financial accessibility of 2021-2025 to establish the inclusive system that would help all the stratum of population and small businesses with access to cheap and affordable financial products. The strategy provides for measures in 5 areas: expanding the coverage of basic financial services, development of digital financial services, improvement of financing for small and medium enterprises, enhancing protection of the consumers of financial services, enhancing the literacy of population and entrepreneurs. At the same time, to satisfy the needs of population and entrepreneurs with microfinance services and simplified procedure of permits issuing, in July 2019, we adopted a presidential decree of Uzbekistan to enhance the accessibility of financial services. With this decree, the microfinance institutions are now allowed to attract loans and credits and act as agents for banks and other financial institutions and provide loans to individuals online. This has never done before, and this very much limited the provision of financial services by the microfinance institutions. Based on the deep studies of the best international practices, rules and norms, in 2019 we developed and approved the law on payments and payment systems. This law is the single legal and regulatory framework in payment and payment systems and serves as the framework for efficient regulation by the central bank of the payment market and financing of payment systems, operators of payment systems, and participants of the electronic cash systems. The payment service market at the moment observes 5 payment systems, including 35, and 30 of them are the central bank payment systems, the intra-bank payment system, and system of immediate payments, and also 2 more payment systems, which are legal entities licensed by the central bank in line with the regulations. The development of infrastructure of retail payment systems such as Roscard and Nofomo that provide services under the banking cards in our country, and also payment services provided under the other payment systems. Just for your information, as of the 1st of July 2021, number of banking cards issued is 24 million. The number of the ATMs installed is 439,000. The number of kiosks and terminals is 26,000. And these figures are growing exponentially based on the demands or growth for these services. One of the most relevant tasks is to introduce the state-of-the-art payment services based on the infrastructure to create the compatible conditions for the client. And in this respect, the governmental systems have established the non-contact payment systems based on NFC that for which HumoPay software was developed that would help using NFC technology to make payments through the mobile phones without the use of the banking cards. At the same time, in March 2020, the central bank started the information system of instant payments through QR codes. In our country, we also registered and have operational 5 systems of electronic money that allow quick and fast and convenient payments based on the international state-of-the-art innovative systems. You are only given
Хорошо. В настоящее время с целью повышения доступности дистанционных банковских услуг Центральный банк совместно с Европейским банком реконструкции и развития и единым интегратором по созданию поддержки государственной информационной платформы запустил проект по созданию информационной системы биометрической идентификации, предназначенной для удаленной идентификации физических лиц, позволяя пользователям банковских услуг. В заключение хотелось бы отметить, что кризис, вызванный пандемией коронавирусной инфекцией,
In conclusion, I would like to mention that the crisis caused by the pandemic and the coronavirus infection has demonstrated the need to accelerate the development in the banking system and to expand infrastructure and instruments for extra banking services. We need to improve financial literacy, and these will become the main activities of the central bank. We will need to improve the access to finance by doing this. Thank you. That's all I had.
Thank you very much, Mr. Turdilia. Our next question is directed at Ms. Salma Elokzai. And if she's has rejoined in the room, I'll just narrate the question. What sort of support CAREC countries expect from IFIs in terms of policy and financial support to deal with financial inclusion challenges? Ms. Elokzai, are you in the room? Otherwise, we can move on to the next speaker.
Hello. Yes, thank you, and I'm sorry for the confusions with the links. Certainly in Afghanistan, the financial inclusion and support to the MSMEs is a big challenge, and there are several and certain factors to it. First of all, for women businesses, and majority of businesses in rural areas and even in the cities, the small businesses are of women who do not have access to even a proper bank account in a bank in their area. One issue and the other, the COVID pandemic put a big pressure on all of these businesses, where so many people lost their jobs, and and also the businesses went into losses. So people stopped their businesses altogether. And mostly women were impacted because women businesses are the majority of the informal business in the private sector in Afghanistan. What the government has done so far is in 2020, we had our first national financial inclusion strategy being approved. And besides that, the World Bank is supporting us with access to finance project, which is providing loans to SMEs and also provides risk guarantees and sharing risks through working with different banks, and then also building banks' capacities, the IFIs capacity in terms of their loan portfolio and also the risk sharing portfolio. But all of this is not enough for the private sector and for these businesses to survive all the challenges that we face in Afghanistan. As you know, the security challenges is a huge and very impactful. And there is also we are currently facing the COVID challenge. We are facing the different, as a conservative society for women, women are also, they do not have access to banks, and in most areas they're not allowed to go to the banks or have a bank account. And the other issue is when they ask for a loan, there are certain documentations required, which they cannot provide, and so that makes it more difficult. Then also in terms of the bureaucracy in registration and paying the taxes and all is also challenging. But I do not want to make this exclusive to women. It's for all the businesses, but for women, because of the environment, it's even more difficult. So from the government side, we have this access to finance project, which is a big one. We did have another project where we work with the rural women on the agricultural side and agricultural value chains. We call it the Women's Economic Empowerment and Rural Development Project. So, and there is also the Afghanistan Credit Grantee Facility that is providing risk sharing for women and in agriculture portfolio and different other portfolios, but also for the youth. And there is a project also by KfW, by our German colleagues, and they're also working to help and support the SMEs and MSMEs in Afghanistan by providing small loans for the startups and new businesses. But as I mentioned, because we have enough space for the private sector to grow, and there are so many of these newly started businesses, small enterprises, and also medium enterprises. They all need a hand-holding. They all need support and facilitation from the government side, from our international community side. But the environment has made it a little more difficult for us in Afghanistan than in more in other countries in our neighboring countries. It's what I want to say is, of course, there are some certain activities by the government and our international community and international partners, but it's not enough. We need to do more. We need to help them to get back on track in terms of their businesses and the way they used to work before the pandemic. So this is it from my side. Thank you.
Thank you very much, Ms. Alokzai, for enumerating very concrete steps taken by the Afghan government. Now we turn to the CAREC Institute, IMF, and World Bank to express their insights in the pandemic and any policy recommendations that they may have for the policymakers. Mr. Syed Shakil Shah, Director, CAREC Institute, please.
Thank you very much, Tariq. So CAREC Institute on this particular subject has so far commissioned 2 works. One is the financial inclusion in the CAREC region, promoting fintech to meet underserved needs in the trade finance. This has been developed together with the ADB experts. And the second one is financial inclusion and fintech in CAREC region, constraints and perspectives. So the first paper is exclusively related to trade finance, which is in the final phases of completion. So I will just go through key findings which we have. In terms of financial inclusion, the progress of in most of the CAREC countries, apart from PRC and 2 other countries in the group, it is not very good. It's a group which falls very low in the ranking of the adoption to fintech and overall financial inclusion. Overall, per capita income of the region is around $3,178, and percentage of population having a bank account, it varies greatly. At the lowest of the graph are Afghanistan and Pakistan with 15 and 21%. And this is World Bank Global Fintech Database 2017, and these numbers must have changed due to the imperatives of the COVID, as the Deputy Governor Seema highlighted. There may have been increase, but that needs to be now coming up in the figures which are there in the international organization. In terms of income group, the higher income group people have most of the bank accounts. So in the lower income group either don't have accounts, or in some countries they have very limited number of percentage share in the bank accounts. So these disparities, when we go into gender dynamics, they become more apparent, especially in case of countries like Pakistan and Afghanistan, where the number of accounts held by women, they are much less than men. And overall, when seen in the context of overall less number of accounts in percentage to the population, this figure is very, very dismal, and it clearly shows how a large number of population is existing outside the formal banking sector. So when we come to accessing the financial services through a mobile phone, again, a very different figure emerges. In some of the countries, the data collected by CAREC Institute shows that these numbers are very low. For instance, in case of Azerbaijan, only 2%, for Afghanistan, less than 1%, for Pakistan, 2%, and Turkmenistan, only 2% of the people with mobile phone, they access their accounts through their mobile phones. So it again shows that the financial technologies, they have not penetrated the mainstream of the populations. So there are factors why the situation is like that. There are factors. There is absence of an integrated national strategy. Of late, Pakistan and Tajikistan have come up with such strategies, but other member countries, they need to develop these strategies. Then there are institutional impediments as well. In most of the countries, the size of the shadow or informal economy is too much. And also, as per IMF, which measures the relative depth, access, and efficiency of financial institutions and financial markets, most of the CAREC countries, their scores on the index is very, very low. On specific to the policy implications, I think the government, our research shows that the member governments need to lead through policy responses that invest in high quality digital infrastructure, and also even more importantly, as one of the learned speakers said, enabling regulatory environment, then building trust of the people in the financial services. That is also very important. They should, instead of informal channels, they should come to the formal channels of financial services. And then multilateral development partners also have to mainstream this agenda in their country-specific programs, and they have to converge various approaches and international initiatives on financial inclusion in their country strategies, and then help the member countries to come up in meeting the targets which are set through those strategies. On specific to trade finance, the study by CAREC Institute shows that most of the requests, around 57% requests of the small traders for trade finance, those were rejected by the financial institution in this country, and this percentage is very high. And most of those applicants, they never approach the formal financing sector again. So, there is empirical evidence that within the constraints of financial system, there is a further bias against small and medium enterprises. And these are the enterprises which can leverage most of the benefits offered by e-commerce and especially in the wake of COVID-19. So their non-access to financial services, that creates a big impediment. So these are some of the key findings of the CAREC Institute. Thank you very much. Over to you, Tariq.
Thank you very much, Mr. Shah, for your views. Now we turn to Mr. Jihad Azur, Director, Middle East and Central Asia Department, IMF, to share his perspective. Mr. Azur, please.
Thank you very much, Tariq. Good morning, good afternoon, or good evening to participants. Let me also congratulate you for organizing this important gathering to discuss one of the main issues in the post-COVID recovery. Of course, we are discussing today an issue that several countries have been trying to address over the last decades, and therefore it's not a new issue. However, this crisis has put a new perspective into the importance of financial inclusion, and also highlighted certain number of challenges that we need to focus on in helping countries recovering from the crisis and using financial inclusion as a way to accelerate this recovery. And therefore, I would focus my comments on 2 points: how the COVID-19 shock has affected financial inclusion, and what are the policies that we think are important going forward to accelerate through financial inclusion the recovery. As I said in the beginning, financial inclusion, it's not a new issue, and countries in the region are lagging behind the trend. And when we compare to emerging markets, there is a lag in terms of financial inclusion, for example, for SMEs, that is 1 to 2. The level of financial inclusion doesn't exceed 6% in the region, where in the average EMs is around 15%. Therefore, we started the crisis with the gap already compared to other parts of the world. The second issue is this crisis was not only unique in its magnitude, but also in its nature. In order to save lives, countries had to shut down the economy, which had a negative impact on financial inclusion. But on the other hand, to protect livelihoods, governments, ministries of finance, and central bank provided support to companies, as well as also in particular to SMEs, in order to help them weather the shock of the COVID-19 crisis. The issue that we are facing today, that the recovery is there, but we are in a phase of recovery uneven because we see gaps between countries, and uncertain because there are still important issues that are not dealt with, starting from the COVID itself. The race between vaccine and virus is still there. The fragilities are of 3. 1, economic scarring. We saw that this crisis has affected certain number of sectors, and especially those where we have small and medium-sized companies. Trade, contact-intensive sectors, those activities were the most affected, and the recovery is slower than others. The second group is the informal sector. One of the main lessons of this crisis is informality, and the size of informality in the region was not only an issue in channeling support to support livelihood, but also in the capacity to recover. And the third one is the fact that here we had a gap between those who had access to technology and those who did not. And with the change in the pattern of spending, of consumption, this has also affected those who had limited access to finance. But on the other hand, we saw opportunities. The first one is technology. Several speakers highlighted this issue. Technology was important to channel remittances, and this is why we saw, I would say, strong resilience of remittances compared to the shock. But also, we saw that the reforms that were introduced in the past in order to increase resilience of banks after the successive crisis, the 2008 crisis or the 2015 shock, had helped countries and central banks to calibrate well and to protect the balance sheets of banks. And the third is the recovery is faster, but however, at the current speed, the region will not recover the pre-COVID trend before 2026. Therefore, it's important now to focus on this important issue that could help us accelerate the recovery and build forward better. And here, I think countries need to work at three levels. One, it's at the macro-financial level. Stability matters, because without stability, the risk that we are seeing with the increasing trend on debt is this will complicate the capacity for the banking system to provide additional access to finance. The nexus of banks and sovereign has increased over the last 12 months, and with a risk of change in policy trends globally that could lead to an increase in interest rate and a risk of capital outflow, the reliance of sovereign on domestic banks could grow, and therefore this could affect negatively the capacity of banks to provide financing to the private sector. The second important macro dimension is opportunities. As we see the global economy recovering, we need to create new opportunities. And those new opportunities exist in certain new sectors like technology, like green recovery, as well as also embracing the global value chains, which are important issues for countries of the region that are currently or have faced during the crisis some of the risks or the impact of the disruption in value chain. The second layer is the institutional. We saw several central banks providing a certain number of support measures to the private sector. We recommend those who have the capacity to maintain it for the time being, but gradually.
Jihad, we cannot hear you. Sattar, can we hear Jihad?
No, Tariq, maybe I suggest in the interest of time, we move on and then Jihad can come back again towards the end. He will be making closing remarks as well.
Okay. So we move on to Mr. Ilyas Gamulov, Practice Manager, to share his insights from the World Bank. Thank you.
Well, thank you very much. Thank you for the invitation. It's unfortunate that we had a cutoff of a panelist and we are at the end of the panel, so I realize that time is short, so I will try to be very, very brief. Let me try to maybe give a perspective a little bit of from the IFIs and the development partners. And here what I want to say is that, of course, we're dealing with very diverse issues and each country is unique. And of course, during the crisis, we provided a lot of finance. We saw a lot of lines of credit in particular to address liquidity issues. And we've seen a lot of demand now rising for risk-sharing facilities and partial credit guarantees. And of course, the provision of technical assistance when it comes to issues that affected even before the crisis, issues of financial inclusion. So for example, financing infrastructure and increasingly digital finance continue. But I think probably the one area where institutions like the World Bank can bring global experience when it comes to both stability and access issues is being trusted advisors and being trusted advisors on some of the wicked issues that we face today. And in my opinion, we face three fundamental wicked problems that we need to be talking about and trying to solve all together. The first one is policy targeting. There is no doubt that there was a lot of policy support during the crisis. But the fact of the matter remains that, based on the surveys that the World Bank has done, only 1 in 4 businesses received it. And 20% of the firms that did receive it had actually not experienced any negative shock, and yet received this policy support. So as we face limited fiscal resources, and as we see that the crisis has been dragging very, very long, the issue of policy targeting becomes much, much more important. So it's very important that as policymakers, we focus on promoting awareness of this support, but also making sure that that policy support is targeted to the viable firms and borrowers that face financial distress and insolvency during COVID-19. So that's wicked problem number 1, policy targeting. I think wicked problem number 2 is how do we exit from some of these extraordinary measures that were put in place? I think this is one of my biggest concerns, to be very, very frank, the timing of the exit from the COVID-19 measures. How do we withdraw? Because if we do it too soon, there's going to be a pro-cyclical effect, right? If we do it too late, we might distort how resources are allocated, we might distort prices. And frankly, also reforms that are needed might not be undertaken. And it's one of the most critical, I think, policy questions we face, because we're entering a new stage now where we need to be thinking of how do we avoid credit crunch? How do we manage potential non-performing loans? And above all, how do we drive a productivity-driven recovery? And I think the message there is that as policymakers in the national financial institutions, we really need to pay attention to early action for non-performing loans. And we need to put those reforms on the insolvency and restructuring frameworks early on, because legal uncertainty later is not going to help us. So wicked problem number 1 was policy targeting. Wicked problem number 2 was how do we exit from the extraordinary measures? And the wicked problem number 3, which will probably link us very nicely to the next panel discussion, is how do we manage the tensions around technology? And I think here, what we can say is, again, we see this through the World Bank surveys that we have done globally, only about 1/3 of businesses has been able to increase the use of digital technology in response to the COVID-19 crisis. So how do we incentivize more the adoption of technology? Whether it's fintech, whether it's e-commerce, whether it's B2B, digital solutions. How do we build the capabilities of firms and the managerial practices in firms to take advantage of this? And at the same time, how do we deal with some of the issues that were mentioned earlier with regards to potential concerns on the concentration of market power? Small firms have been exposed to bankruptcy to a greater extent than larger players. The government policy responses many times may have raised risk to competition. And the fact of the matter that we do more and more in a remote basis may be boosting the position of some large platform businesses. Not to mention that in many of our countries, we still have an open debate when it comes to the role of the state and state-owned enterprises and state-owned banks. So I think there are 3 wicked issues that we need to be working as trusted as advisors from the IFI side and for the policymakers to be putting on the debate table. Again, policy targeting, exit from the measures, and how do we manage the tensions with technology as we go forward. Thank you very much.
Thank you very much, Elias, for your views. And I would like to thank all the panelists. We don't have time to synthesize. I leave that towards the end of the session 2, which will start in just a minute, and it will be moderated by Dr. Junkyu Lee, Chief of Finance Sector Group. Please stay online. And once again, thank you to all the panelists and audience. Thank you very much.